NVIDIA just reported its fiscal Q3 2025 earnings, and the numbers came in strong. Adjusted EPS hit 1.3, beating the 1.25 estimate. Revenue came in at $57.01 billion, ahead of the expected $54.9 billion. Net income surged 62% year-over-year to $31.91 billion. But before earnings, sentiment wasn't great. NVIDIA dropped almost 8% in November, and the broader market fell nearly 3%. But once the numbers came out, the stock jumped almost 5% after hours. But even with a near-perfect earnings print, the same questions keep coming up. How long can the AI wave last? Are we sitting inside a valuation bubble? And if I haven't bought yet, is it too late? If I already hold shares, should I trim? And at what levels? In today's video, we're breaking down NVIDIA's latest earnings and the real fundamentals behind this AI giant. Watch to the end. You'll walk away with your own view on whether the stock still fits your portfolio. This video is a little long. You can save or subscribe first. I'm Alex. Let's begin. According to LSEG data, NVIDIA expects Q4 revenue around $65 billion. Analysts were looking for $61.6 billion and 1.43 in adjusted EPS. NVIDIA also guided gross margins to about 75% versus Wall Street's 74.5% expectations. NVIDIA is now the most valuable public company on the market, all driven by explosive demand for AI chips. The data center segment remains the heartbeat of the company. Revenue hit $51.2 billion this quarter, easily beating the $49.1 billion estimate, up 66% year over year. Breaking that number down, most of the revenue came from compute, which is basically the GPU side of the business, and that brought in around $43 billion. The networking side added another $8.2 billion, and that's the part that lets dozens of GPUs work together like one massive machine. Big tech is still buying at full speed. Every major AI player uses NVIDIA chips. Microsoft, Amazon, Google, Oracle, and Meta. A lot of them are doubling down, building larger AI data centers and buying the most advanced and the most expensive GPUs out there. NVIDIA CFO Colette Kress said the best-selling product right now is Blackwell Ultra, the second generation of Blackwell. And Jensen Huang added, cloud GPUs are sold out. He also mentioned that advanced chips are already booked through 2026, with commitments totaling $500 billion. That tells us the demand that kicked off after ChatGPT's launch hasn't slowed down, at least not yet. But not everyone is fully convinced. Some analysts argue the numbers won't completely erase bubble concerns. Their point is simple. AI infrastructure spending can't grow at this pace forever. There are also constraints NVIDIA can't control, like power supply, land, and grid access. These bottlenecks could slow how fast hyperscalers can turn demand into actual revenue in 2026 and beyond. On the earnings call, Jensen pushed back hard against the AI bubble narrative, saying the company is positioned to win at every stage of AI, from pre-training to post-training to inference. His message was clear. Both demand and the supply chain are far from peaking. This company started with gaming GPUs, and today it's redefining the ceiling for accelerated computing. But for investors, the key question isn't how strong NVIDIA is, it's how long this strength can last. Yes, the fundamentals are still solid. Data center demand remains strong, Blackwell is booked out a year in advance, and hyperscalers continue to pour CapEx into AI infrastructure. But expectations are also sky high. The stock trades at a premium. The supply chain relies heavily on TSMC's advanced packaging. Export rules and China demand add uncertainty, and AI CapEx cycles can shift quickly. NVIDIA is absolutely at the center of a structural trend, but the valuation and the risk profile deserve sober judgment. Can this growth continue? Let's break it down. First, is AI CapEx still expanding? Microsoft, Amazon, Google, Meta, their CapEx numbers are NVIDIA's real demand curve. If they keep expanding clusters, growth continues. If they shift towards efficiency instead of expansion, NVIDIA's growth slows. Number two, Can this product cycle carry the momentum? This quarter was mostly Hopper chips. The next leg is Blackwell. If performance and cost improvement deliver and the supply chain holds, NVIDIA has runway. If not, growth moderates. And number 3, what about competition? Don't just look at AMD. The real risk is self-designed chips. AWS Trainium, Google TPU, Meta Silicon, even OpenAI's work. If self-design ramps up, NVIDIA's share gets pressured. Does valuation match the risk? The market is paying for 2 to 3 years of high growth. NVIDIA trades at a forward PE in the mid-40s to 50s. That's priced for perfection. If growth drops to 20% or less, multiples compress fast. Have all the risks been priced in? You need to consider these key risks. Number 1, China exposure, which is 20 to 25% of revenue. Number 2, TSMC packaging bottlenecks. Number 3, customer concentration. And finally, a potential peak in hyperscaler CapEx. If these aren't priced correctly, be cautious. So, how much NVIDIA should you actually hold in your portfolio? If you're a growth-focused investor and you're comfortable with volatility, keeping around 5 to 10% in NVIDIA is pretty reasonable. It gives you meaningful exposure to AI without taking on excessive risk. If you're a more moderate investor and you want exposure but don't want the full weight of a single stock on your shoulders, then something in the 2 to 5% range makes more sense. And you can balance it out by pairing NVIDIA with funds like QQQ or SMH. If you're conservative and you prefer a smoother ride, then keeping it under 2% or simply owning semiconductor ETFs is usually the better approach. And if you already own NVIDIA, think of it as a trend position in your portfolio, not a lottery ticket. Manage it with discipline. If you don't own it yet, don't rush in just because the stock is running. Be patient, wait for sentiment to cool off, and look for opportunities when the price comes back into that $140 to $180 range. NVIDIA is worth holding, but never worth going all in. The growth is real, but your position sizing and risk control matter even more. I'm Alex. If you want more coverage on NVIDIA and the entire AI sector, make sure to like and subscribe. I'll see you in the next one.